Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign motherland. Our flag shall be a symbol that truth and justice reign. In peace all battle honored, and this we count as gain. To our children, a banner without stain. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
Hello, everyone, and welcome to DataPro's annual webinar. You are all welcome to the International Rating Webinar, Book Launch, and 30th year anniversary. Thank you for joining us today, Thursday, 9th of October, 2025. Indeed, I am excited to be your anchor today. We are broadcasting live from Lagos, Nigeria's Commercial Nerve Center. We are delighted to welcome you. My name is Dr. Wens Woga, Head Consulting at DataPro and Director, Compliance Institute Nigeria, CIN. I'm also a development economist, chartered accountant, risk manager, compliance professional, and chartered banker. And now, without further ado, let's get started as we proceed to connect to the source of life and living, our Maker. To take us through this solemn and hallowed process, I invite Pastor Olufemi Obaweya to give us the opening prayers.
Thank you very much, Doctor. Let me first start by saying congratulations once again to the management staff of DataPro. I pray this is just the beginning of more heights in Jesus' name. Shall we pray? Heavenly Father, we thank you for your goodness, your faithfulness over these 30 years. You have been the foundation and wisdom of this establishment. Father, we pray your favor continues to rest upon this organization. Lord, establish them. Let the decisions they take reflect integrity, excellence, and divine purpose. And Lord, as we open this seminar, we invite your presence to guide every discussion and inspire fresh insight, that this may mark a new chapter in the growth of this organization and by extension, the area of influence, the financial establishments that they may come across and impact. This we pray in the mighty name of Jesus. Amen.
Annual International Rating Webinar was started in October 2021 by DataPro, Nigeria's numero uno technology-driven credit rating agency. This year's program is themed the role of credit rating agencies in a dynamic global economy. DataPro, the organizer of the International Credit Rating webinar, is the fastest growing credit rating agency CRA in Nigeria and across other African areas. It is also using technology such as artificial intelligence, machine learning, big data, and analytics. DataPro has changed the narrative in relation to turnaround time, accountability, transparency, rating outcomes in Nigeria. The primary goal behind this yearly event is to enhance stakeholders' engagement and extend the all-important value proposition of stimulating the Nigerian economy. The 2025 edition is the fifth uninterrupted annual International Credit Rating webinar series. This year's perspective will assist in consolidating the traction and the benefits realized by stakeholders from previous editions. There are 3 distinct activities lined up for this year's edition, which include the rating webinar, goodwill messages, presentation by the keynote speaker, and panel discussion. DataPro 30th anniversary with the cutting of anniversary cake and book launch, the autobiography of Abimbola Adesoyoju, founder and CEO of DataPro. The program this year, 2025, promises to be bigger, richer, and will also be thrown open to a wider audience. It is expected to provide the needed roadmap to build on all stakeholders' objectives and expectations. Please be assured that we will endeavor to adhere to the planned program within the scheduled time frame. We enjoin you to participate by making generous use of the chat and question box for your questions and comments. We look forward to receiving, collating, and addressing them later in the program. We are optimistic that you will enjoy this program and it promises to be exciting. Once again, we are quite delighted to be with you today at the DataPro's 5th annual International Credit Rating webinar, and do warmly welcome you. At this time, I would like to introduce the founder and Chief Executive Officer of DataPro. I have the honor of introducing to you a true pioneer and pace-setter, a great man who is constantly innovating and developing new ways to assist organizations and stakeholders to stay ahead of the curve. Mr. Abimbola Adesoyoju, founder and CEO, DataPro Limited, will now deliver his welcome address.
My sincere appreciation to everyone for joining us today on the occasion of the 5th in the series of our annual International Credit Rating webinar and the digital celebration of DataPro's 30th anniversary. We are indeed in a joyous mood, so my speech will be short. We want to first give all glory and praises to the Almighty God for fulfilling the vision in our lives. We appreciate all those that have shared in our dreams and aspirations over the past 30 years. To all our clients, agencies, and regulatory bodies who have found us worthy, we promise to always keep the flag flying. In 30 years, we have contributed significantly to the growth and development of compliance, credit rating, data protection, and business information advisory services, not only in Nigeria, but all over the African continent. We will continue to evolve both in innovative services and technological delivery in the coming years. This year, as expected, the webinar has a very distinguished panel to discuss the theme, the role of credit rating agencies in a dynamic global economy. We have with us Professor Mahesh Kotecha, joining us from his base in New York with over 40 years of global experience in the business of credit rating, who will deliver the keynote address. Every one of us at all levels have a lot to learn from his experience and his speech as our country, Nigeria, continues the reforms that will liberate our economy from dependency and pervasive poverty. Our panel of experts also have a lot to cascade. We have with us Mrs. Angela Jide-Jones, who is the Chief Executive Officer for Shewa Capital. She's joining us from Lagos and will give us perspective from our domestic market. We have Dauda Semembe, the CEO of Africa Catalyst, who is a global development expert and is joining us from Dakar, Senegal. We also have Vindagasa Lingasen, who is the CEO of CARE Credit Rating Agency, and will share part of his experiences working with one of the biggest rating agencies in the world. We also have Ribinzi Maria, who is the Chief Operating Officer of Sovereign African Rating, joining us from South Africa. We are equally honored to have Obe Mbusi, Director of Premier Rating Services. With all these varied panelists, this session today promises to be another masterclass in developmental economics and credit rating services. So please stay tuned. We want to also thank our regulator, most especially Dr. Momotimi Agama, who has graciously joined us today to deliver the goodwill message. Sir, we appreciate and thank you. Your style of leadership and involvement in making all the difference in the capital market and correctly positioning Nigeria in the global space. We thank you for all what you are doing for the capital market. We will cut our anniversary cake during this event and also unveil my personal biography. All participants will receive a free e-copy of my book and other anniversary souvenirs. So let us sit back and have the most fulfilling and rewarding experience. Thank you all for being here.
Thank you so much, Mr. Abimbola Adesheloju, Data Pro, for the awesome and impactful welcome address. Now we move forward with the goodwill messages. Today, for the goodwill messages, we have special guests who will deliver goodwill messages in the person of Dr. Momotimi Agama, of Director General of Securities and Exchange Commission, SEC, Nigeria. We also have the MD of MCGC, who is ably represented today by the Executive Director, Risk Management. At this time, I am now pleased to introduce our special guest who will deliver the special goodwill messages. Dr. Emotimi John Agama, the Director General of Securities and Exchange Commission, is here present SEC is the Nigeria's apex regulatory institution for the capital market. Dr. Emotimi is a distinguished economist, financial analyst, and management accountant. Dr. Agama brings over 3 decades of professional experience, including extensive expertise in capital market development, financial regulation, economic strategy, and institutional leadership. I have the pleasure and honor to now invite Dr. Emomotimi Agama, Director General, Securities and Exchange Commission, SEC, Nigeria. Dr. Emotimi, please.
Thank you very much, Mr. Woga, for the introduction. My name is Emomotimi Agama, as has been stated earlier on. I bring you goodwill from the Securities and Exchange Commission, Nigeria. So it's indeed a pleasure to deliver this goodwill message on the 4th edition of the annual credit rating webinar, an event that is of great significance, particularly as we begin to appreciate the value of credit rating in Nigeria. On behalf of the management and staff of the Securities and Exchange Commission Nigeria, I commend DataPro and its partners with their foresight and dedication in convening this important platform that brings together regulators, financial institutions, credit rating experts, investors, and development partners to examine the evolving role of credit rating agencies in Nigeria's dynamic global economy. The theme of today's webinar, the role of credit rating agency in a dynamic global economy, is relevant and profoundly reflective for our times. It underscores the need for trust, transparency, and sound governance as the bedrock of resilient financial systems. As economics across the world contend with shifting global trends, geopolitical tensions, and technological transformation, the need for credible mechanisms that assess and manage risk has never been more pressing. Credit rating agencies, as you well know, play a critical role in filling this gap by providing investors and institutions with objective data-driven insights that inform sound financial decisions. Credit rating agencies remain a cornerstone of the modern financial system. They serve as a compass for both investors and issuers, guiding investment flows, pricing of financial instruments, and the access to funding. Beyond their exclusive and evaluative function, credit rating agencies contribute significantly to financial governance and discipline. Your work fosters transparency, encourages responsible borrowing and lending, and strengthens market accountability, all of which are essential for long-term capital market stability. In emerging markets such as Nigeria, credible and independent credit ratings are vital. They bridge information gaps, boost investor confidence, and guide capital toward productive sectors, thereby supporting national development and strengthening market participation. At the Securities and Exchange Commission, we recognize that well-functioning credit rating agencies are essential to the integrity of the capital market. The Commission remains steadfast in its commitment to maintaining a transparent and effective regulatory framework that promotes accountability, professionalism, and investor protection within the credit rating agency and industry, and in conformity with the standards of the International Organizations of Securities Commission. Furthermore, we will continue to strengthen our oversight over credit rating agencies, encourage the adoption of international best practice, and support innovation that enhances the credibility of ratings, especially in a fast-evolving financial environment. Our broader vision for the Nigerian capital market is one of inclusivity, depth, and resilience, a market that mobilizes long-term financing for infrastructure, enterprise, and innovation. In this vision, credit rating agencies serve as trusted partners in driving financial discipline and advancing transparency across market segments. As we look to the future, the path forward requires greater collaboration among all stakeholders. Regulators, rating agencies, investors, and market operators must continue to work hand in hand to foster credibility, consistency, and confidence within the financial ecosystem. By deepening partnerships and exchanging knowledge, we can build a stronger credit rating culture that not only reflects our local realities, but also aligns with international standards. This will not only position Nigeria, but indeed Africa, as a credible destination for sustainable investment and capital formation. Together, we can ensure that credit rating agencies remain relevant agents of stability and progress in an increasingly complex global economy. Once again, I commend the organizers for its consistency and commitment in hosting the 4th annual International Credit Rating webinar. Over the years, this platform has continued to foster meaningful dialogue, deepen understanding, and strengthen collaboration among key players in the financial system. May today's deliberations further enhance the role of credit rating agencies in promoting resilient, transparent, and dynamic financial markets across Nigeria and the wider African continent. Thank you, and God bless the Federal Republic of Nigeria.
Thank you so much, Dr. Emomotimi John Agama, the Director General of the Securities and Exchange Commission, SEC, Nigeria, for your wonderful goodwill message and attendance despite your busy schedule. We also appreciate enormously your transformational leadership at SEC Nigeria and exemplary prowess in repositioning the capital market, as well as your election and role on the board of International Organization of Securities Commission, IOSCO, headquartered in Madrid, Spain. In line with your goodwill message, the dynamic global trends, geopolitical tensions, and the technological transformation have further justified the urgent and continuous need for credible mechanisms that assess and manage risk. Hence, the focus of this webinar's theme could not have come at a better time. According to your goodwill message, it is necessary to maintain transparency and effective regulatory framework to promote accountability, professionalism, and investor protection within the credit rating industry to enhance mobilization of long-term financing for infrastructure, enterprise, and innovation, which will lead to economic growth and development. Through stronger partnership, cooperation, coordination, collaboration, and knowledge sharing among stakeholders, a stronger credit rating culture with local content realities, but also aligning with international standards and best practices. Hence, Nigeria, Africa, and the world will all be beneficiaries by attracting sustainable investments via capital inflows and formations. Once again, we want to profoundly thank you, Dr. Emomotimi John Agama, the Director General of the Securities and Exchange Commission, SEC, Nigeria, for your attendance and delivery of your goodwill message at this webinar, despite your busy schedule. Thank you so much, the DG SEC. I now have the pleasure to introduce our second special guest, who will also deliver his goodwill message. The second special guest speaker is Mr. Bonaventure Okaimo, the MD/CEO of the National Credit Guarantee Company, NCGC. He was formerly the Chief Operating Officer of the Development Bank of Nigeria and has over 30 years of banking experience. He also serves as a non-executive director at Impact Credit Guarantee Limited. His expertise includes branch operations, product development, relationship management, and leadership roles in retail and SME banking, institutional banking, information technology, and strategic operations service delivery. Mr. Bonaventure Okaimo, MDCO, NCGC, is ably represented by Professor Ezekiel Oseni, the Executive Director, Risk Management, NCGC. He served as a special advisor on risk management to the MDCO of Bank of Industry. He was also, at the time, a general manager of Chief Risk Officer of Bank of Industry. He also served briefly as the CEO, National Economic Reconstruction Fund, NAFUND, from July 2016 to December 2017. His wealth of experience cut across corporate finance, auditing, entrepreneurship, compliance, and risk management. I am delighted to now invite the next special guest speaker, Mr. Bonaventure Okaimo, MDCO, NCGC, who is ably represented by Professor Ezekiel Oseni, Executive Director, Risk Management, NCGC, to now deliver his goodwill message.
Thank you very much, the moderator. Good afternoon, everyone. And to the founders and CEO of DataPro, Mr. Abimbola Adeseyoju. We want to say a big congratulations to you on the occasion of your 30th anniversary of DataPro. We're very happy to identify with you from NCGC. So I start here this afternoon to present a goodwill message from my boss, Mr. Bonaventure Okaimo, who is unavoidably absent. He said in his apology. We're very pleased at NCGC to know the great work that DataPro is doing to bring integrity to data processing through its various activities and services. We are particularly delighted in its credit rating service to the Nigerian market and beyond. Without missing words, credit rating is a professional service that can only be offered by a well-equipped team like yours, with not only technical knowledge to gather, analyze, and make indisputable judgments, but also with highest level of integrity. The roles of credit rating agencies in facilitating cross-border investments, resource allocations, equip investors to make informed decisions among competing opportunities, improve organizations' governance, and support financial market stability cannot be overemphasized. We thank you and other credible players in your industry for the great job that you are doing. At National Credit Guarantee Company, your support to achieve our mandate of unlocking access to funding for MSMEs, local manufacturers, large enterprises, and credit consumers through credible market data, analysis, and rating reports is very vital. We were very new. We came on board just about 5 to 6 months ago, and we are here to fill a big gap in the financing industry. And so your support for us and others like us, being able to deliver our mandates is very, very important. So we look forward to having you and your other team, play with us. Your support will help us and the lenders. We are to guarantee to make realistic risk profile of the borrowers and the lenders, to be able to make risk-based pricing of our guarantees and other products that we'll be offering to the market, to lower lending interest rates, to eliminate and possibly reduce or alternatively reduce demand for collateral from high-rated credible borrowers is very, very important to us. Equally important is the rating. Is that the rating will also promote responsible borrowing. It's going to promote accountability and sound corporate governance in the borrowing entities. So you're a partner that we're looking forward to relate with and to work with. So it is therefore our pleasure at National Credit Guarantee Company to seek opportunities to partner with you and your other industry players. On behalf of the board, the management and the staff of National Credit Guarantee Company, we want to wish you and all the participants an impactful deliberation. Thank you very much, and God bless.
Bonaventure Okaimo, MD/CEO, NCGC, who is today ably represented by Professor Ezekiel Oseni, Executive Director, Risk Management, NCGC, for your awesome goodwill message. In your goodwill message, you express delight about the good job DataPro is doing, particularly in the area of credit rating services to the Nigerian market and beyond. You alluded to the fact that credit rating is a professional service that can only be offered by a well-equipped team like DataPro with deep technical knowledge and high level of integrity. You pointed to the role of credit rating agencies in facilitating cross-border investment, resource allocations, equipping investors to make informed decisions. Once again, thank you so much, Mr. Bonaventure Okaimo, MD/CEO, NCGCE, represented by Professor Ezekiel Oseni, Executive Director, Risk Management, NCGC, for your wonderful goodwill message. Now is the time to go to the keynote speaker. It is my pleasure to introduce the keynote speaker in our 2025 International Credit Rating webinar. He is Professor Mahesh Kotecha, the President and Founder of Structured Credit International Corp, SCIC, based in New York, specializing in capital and emerging markets and credit rating, particularly for African clients and others. He has extensive experience in the industry, having served as Managing Director at MBIA Insurance Corporation and Capmark, and a head of sovereign, supranational, and structured finance rating at Standard & Poor's for nearly a decade. His career also includes role of Federal Reserve Bank of New York, where he advised foreign central banks on the management of the US dollars reserves, and UNFPA as an adjunct senior fellow at the Council on Foreign Relations, 1999 to 2002. Kotecha advocated for sovereign credit rating in Africa, influencing major initiatives in this area supported by the UNDP and the U.S. State Department. He holds an MS from MIT Sloan School and BS from Harvard College, and is a member of the Bretton Woods Committee and the International Advisory Panel of the East African Development Bank, and a CFA. He is a member of the Concilium of UNDP's Africa Credit Rating Resource Platform. Born and raised in Uganda, Kotecha attended Jinja Secondary School and again Khan Secondary School in Kampala before pursuing higher education in the US. He is the author of a book, The River Finds Its Course, December 2023, and numerous articles on credit ratings and capital markets. Ladies and gentlemen, please join me to welcome Professor Mahesh Kotecha, the President and Founder of Structured Credit International Corp, SCIC, as I invite him to deliver the keynote speech.
Thank you very much, Dr. Nwoga, the MC. Can you hear me okay?
Thank you. Go ahead, please.
Okay, thank you very much. I'm very pleased to join the distinguished ladies and gentlemen in the audience and those who have preceded me as speakers and those that will succeed me. It's a great honor to deliver this keynote address at DataPro's International Rating Webinar, I believe the 5th, and at the occasion of the 30th anniversary of the founding of the DataPro agency. My congratulations to all those who participated in this huge success. I thank the organizers for inviting me and commend DataPro for its important contributions in strengthening the Nigerian credit rating landscape and actually beyond Nigeria. The theme before us, leveraging credit ratings for economic growth in developing countries, comes at a critical time. I just listened yesterday to Kristalina Georgieva, the managing director of the IMF, at her kickoff session for the World Bank annual meetings, which I'll attend next week in Washington, D.C. She noted the great importance today of fostering capital flows from internal sources in Africa when pressures are strong on the international markets that restrain capital flows, both because of risk and because of market conditions. Both advanced and emerging economies face profound fiscal and financial challenges. In 2001, I was invited by the Stockholm School of Economics in Riga, Latvia, to give a lecture on local credit rating agencies, much like this one. At that time, my firm was exploring the possibility of setting up a Baltic area rating agency for 3 or 4 countries in the region, Latvia, Lithuania, Estonia, which we decided not to do then. But the invitation reflected a growing recognition even then, 25 years ago, that ratings could play a transformative role in the development of local capital markets and the development of credibility of emerging economies, which Baltic states were at that time, and to some extent still are. So I want to first talk about the tale of 2 fiscal paths. We fast forward to today. In a recent commentary, I described the contrasting stories of 2 nations at different ends of the fiscal credibility spectrum, United States and Nigeria. Moody's, earlier this year in May, removed the last AAA rating on U.S. in a stark reminder that even the world's most privileged credit story can be eroded by political dysfunction and mounting deficits. Prestige or might alone cannot shield a nation from the consequences of poor governance. Meanwhile, Nigeria is climbing back from the brink. Moody's and Fitch both upgraded Nigeria, reflecting improved institutional credibility, fiscal reforms, and a revamped policy framework. The markets responded. Spreads on Nigeria's 1931 Eurobonds narrowed by over 250 basis points. That's very, very high shift with 1-notch change in the rating. Almost unprecedented. Even as U.S. Treasury spreads widened by 50 basis points owing to the downgrade by Moody's of the U.S. rating. The common message is clear. Governance matters. It's not just in theory, but in credit ratings, in borrowing costs, and ultimately in the confidence of investors. So now we turn to the role of credit rating agencies, which has been described to some extent already by the Director General of the SEC and by others preceding me. Credit ratings are not just a numbers game, although DataPro knows numbers. They are independent and credible opinions of creditworthiness, the ability to repay your debts on time as due. Use information asymmetry, provide common language between issuers and investors, and reinforce transparency and discipline in financial management. They assess whether the investor will get repaid its investment on time as scheduled. That's critical, on time and as scheduled. For issuers, ratings lower borrowing costs, broaden investor base, enhance credibility. For investors, they provide benchmarks, comparability, and enhance liquidity. For the system as a whole, ratings deepen financial markets, enable financing, and supplement regulations. Ratings thus occupy a unique position in global finance, both a reflection of fundamentals and a catalyst for reform. And they are a private sector initiative, which is remarkable because of their role, which is quasi-regulatory. My experience with rating agencies has been mentioned already, but let me just highlight a few things that are relevant today. My journey has given me direct experience with rating agencies beyond the global big 3. I was, as mentioned by the MC, at Standard & Poor's for nearly 10 years, running a major part of their international rating activities, supranational, sovereigns, and all public sector. So in this particular case, I want to talk about my local rating agency experience. In Colombia, after leaving S&P, I invested in BRC Ratings, one of the country's leading credit rating agencies. I served on its board and its rating committee, particularly for structured financings and certain other financial institutions. And after more than a decade, a dozen years actually, of involvement, we sold the company to Standard & Poor's at a nice multiple. And it has integrated the agency into its global rating platform and continues to operate today. Today, I'm also an investor in Turk Rating, an independent rating agency in Turkey, where I served on the board for some years. and remain a shareholder. These experiences shown me firsthand both the promise and the challenges of building local rating agencies, how they can provide invaluable local insight and encourage long-term investment in infrastructure, as in Colombia, but also how difficult it can be to gain recognition and acceptance from local and global investors. So I really commend DataPro for the journey that they have undertaken for 30 years. That shows guts, it shows persistence, it shows patience, and it shows professionalism. I congratulate you. Ratings and economic growth. This is a very important issue. Why do ratings matter for economic growth? Is because stronger ratings attract long-term private investment and reduce borrowing costs. Nigeria is in a very interesting position with a capital market in Africa which has few parallels. South Africa, Kenya to some extent, but then Nigeria. And you have, of course, CFA zone in the Yomwa region and to some extent in the CEMAC region. But Nigeria's capital markets are really quite robust, and they actually protect its ability to borrow and maintain fiscal soundness in the pressure under stress of fiscal deficits. That frees up public resources for governments to invest in infrastructure, education, and healthcare because there is private capital available. Sovereign ratings also encourage governments to adopt sound fiscal management and structural reforms. They reward transparency and credibility. For corporates, they open doors to global capital and facilitate innovation and growth. In short, ratings are not a substitute for policy, but they can be a powerful reinforcement of good policy. They can underline that the policies are good or point out that they are not. And both have consequences. They can amplify the benefits of reforms and discipline the costs of inaction. Now, Africa's experience with ratings is two and a half decades long, and I've had some role in that. My involvement began with the first rating of African Development Bank in 1984. I was the party on the other side of Babakar NDI and Kira Peabody, which was their investment advisor, and I was at S&P. We did that rating in 84, and then not much happened in other new ratings in Africa for a while. In the early 2000s, very few African governments had sovereign ratings, about 2 or 3, Mauritius, 1 or 2 others. That changed when UNDP and the U.S. State Department financed the first sovereign ratings by Standard & Poor's and Fitch, respectively, for African sovereigns. This was encouraged in part by a roundtable on capital flows on Africa to sub-Saharan Africa, which I directed at the Council on Foreign Relations, a U.S. think tank, and which recommended that African governments seek such ratings. The Assistant Secretary of State from the U.S. State Department, Walter Kansteiner, was a speaker at my invitation at that conference, and Zephyr Diabre, who was formerly Minister of Finance of one of the African countries, I believe Mali, or Burkina, I'm not sure which one. He was at the UNDP as Assistant Administrator, and he was a member of my roundtable. Both took up the matter with their respective organizations and funded the first ratings for African governments, partly thanks to our work together. And today, over 30 African countries are rated by at least one rating agency of the big 3. And Morocco has just been upgraded to investment grade, the 3rd African country to be rated investment grade by S&P earlier this year. These ratings have helped catalyze African Eurobond market, with over 2 decades has issuances that exceed $300 billion, with about 2/3 of that outstanding today. So actually, the original issuance might even be closer to $400 billion, although I don't have numbers on that to document that. Ratings have become not only a passport to international markets, but also a benchmark for investors on governance and reforms. Yet there are challenges, especially for African governments. Too few African countries have investment-grade ratings, and they remain vulnerable to commodity cycles, political instability, and fiscal stress. Some methodological challenges and data limitations add to difficulties. For example, African economies tend to be commodity dependent, Nigeria with oil, for instance, and have large informal sectors which do not generate much government revenue. The women of Nigeria are famous for their entrepreneurship. which increases fiscal deficits because the revenues are not captured in the private sector revenues are not captured in government revenues. So fiscal deficits are higher than they might be otherwise. And that's a key sovereign ratings metric. Debt statistics of some governments are also not reliable. An example is Senegal. In October last year, they suddenly found that they had more debt than they thought. They disclosed that to their credit, and it led to a couple of downgrades for them because debt was higher than thought, quite significantly. Cross-border trade, some illicit and some not, is also prone to understatement in national trade statistics because this trade that goes on between the borders of Nigeria and Togo, for example, much of that in the old days was oil bought at cheap prices in Nigeria and sold at higher prices across the border for private profit. That's not reported, and that therefore is not captured in the national statistics, and therefore doesn't affect the ratings, which is a pity. So these are understatements of strength that need to be brought out into the open and documented and add value for the ratings. And there are others. Of course, African governments remain weak in their level of development, their GDP per capita, the economic structure, which is relatively less diverse. Nigeria is very oil dependent, although non-oil exports are rising. External balance, which tends to be dominated by a few export commodities and large amounts of imports for food and fuel, and limited buffers against event risk. So these limit the ratings and have kept them at non-investment grade level for many, many countries in Africa. Nonetheless, progress is being made, and African sovereigns are able to borrow, even with their ratings at the levels that they are at. Success stories among the African countries are worth mentioning because we need to benefit from our successes and emulate them. Mauritius and Botswana remain Africa's two investment-grade sovereigns, apart from Morocco, which I just mentioned is the third now. Their success reflects more than luck. It reflects prudent policies, strong institutions, and political stability. Mauritius diversified from sugar into tourism, financial services, and IT. One of my teachers in high school would say he had visited Mauritius, and people would have at the door, leaving the door, they would have a bowl of sugar. And as they were entering or leaving the house, they would just take a little fist full of sugar and just eat it. So that's changed, no doubt. They've diversified into IT, maintaining prudent debt ratios, and have attracted investment in the financial sector and also in IT, in electronics. Botswana carefully managed its diamond revenues from the very beginning, running budget surpluses and investing in resource-based windfall from the diamonds wisely in infrastructure, education, and healthcare. I commend the rulers, the governments of Botswana over the years for having had the foresight, integrity, and the confidence over a long period of time to do that for their people. That credibility has translated into investor confidence, including investment-grade rating, lower borrowing costs, and sustainable growth. The lessons are not unique. They are replicable. If governments commit to governance, good governance, transparency, and reform, they will get rewarded. But of course, there are challenges. Developing countries have formidable obstacles. Volatile capital flows, shallow domestic markets, dependence on commodities. AGOA has just been terminated by the U.S., and the tariffs are a big burden on many countries. Local credit rating agencies also face challenges. Their credibility is difficult to establish, and I think it's a great job that DataPro has done to establish its credibility. Resources and investor recognition are also limitations. As experience has confirmed, local agencies can succeed if they're independent, professional, and well supported by regulators, which the DG mentioned it does at the SEC. The dominance of the big three agencies, Moody's, Standard & Poor's, and Fitch, remains a reality. But African agencies like DataPro are increasingly demonstrating their relevance by providing local perspectives that local and global investors can trust. Yet let us also be candid. The pathway for a new rating agency is not easy. African Union, for example, has proposed establishing its own rating agency to provide a more balanced perspective on African economies. The idea is compelling, but such agencies will need to overcome skepticism from international investors demonstrate true independence and build the analytical depth to be credible initially in the region, in the regional capital markets, and eventually in the global capital markets. I can personally attest that success requires more than good intentions. It demands governance, professionalism, capital, and above all, the ability to earn trust over time. When I started out at S&P, for example, we were not present in the Eurobond markets. I was at the first rating seminar we set up in 1980, December, at the Savoy Hotel in London. So it was a long journey, even for the big three. Without this, new agencies risk being seen as political projects rather than credible market participants. And I think this is a risk that AU should bear in mind. Let me also address a recurring issue in African ratings debate, the so-called African risk premium. There's a school of thought at the African Union and elsewhere that African ratings are too low because they are driven by a misperception of African risk. Let me just put it bluntly, there's a bias. I don't think there is, but there is a perception that there is. It is true that advanced economies benefit from high ratings that allow them to borrow cheaply, while many African sovereigns face elevated borrowing costs even when fundamentals improve. UN Economic Commission for Africa has pointed to liquidity risk as one factor, and Vera Songwe, its former Director General, has proposed a liquidity support facility to help mitigate this and has got funding to do that. But that's a huge task because liquidity doesn't come with a few $100 million. It takes billions and billions for liquidity. African Union and others have proposed another solution, establishing an African rating agency to provide an alternative, presumably unbiased ratings. Such an initiative is not without merit, provided it can gain traction with investors through independence and credibility. After all, local investors in China, Japan, India, you will speak to CARE, which is an Indian rating agency, Malaysia, and Nigeria, among others, pay close attention to their own rating agencies, but credibility is everything. An agency that assigns higher ratings than the big three without the same rigor risks being discounted by investors in the global investor markets. The real benefits of ratings are not in flattering grades, but in the discipline they impose, forcing countries and companies to learn the ropes, improve performance, and ultimately earn the ratings they deserve. There is indeed a role for an Africa-focused rating agency, especially for investors who concentrate on African borrowers and seek relative assessments across this universe. Africa, it is said, has $2 trillion of funding available in its pension funds and sovereign wealth funds and other sources of institutional money. We need to tap that, and local rating agencies are the best means to do so. Yet international investors will continue to rely primarily on established agencies until any new African initiative demonstrates independence, rigor, and transparency to gain lasting international influence. The path forward, well, it's first, local agencies must be strengthened and continue to be in business. So I commend DataPro's journey and that of others like it. And I'm glad to see DataPro fostering regional cooperation among other agencies that are active in the area. You have invited several of your peers to attend and speak at this event, which is very, very, very good. Second, enhanced transparency, which is a continuing challenge. Improved data quality, also a continuing challenge, and it's been mentioned that DataPro is looking at artificial intelligence. I talked to Standard & Poor's just two weeks ago at an alumni reunion, and a senior executive of S&P said they are looking at artificial intelligence. Of course, it's a threat to individual analysts. Will their jobs be taken away? I don't think so, because ratings are not simply a numbers game, as I said before. They are a combination of data and judgments and experience that gives the judgments. So the second challenge is not only to enhance transparency and improve data quality, but also build capacity in government ministries and companies to engage with the rating agencies effectively. UNDP is working on this project. I'm a member of their concilium, and I commend to you the platform that they have set up for African governments to benefit from education on how ratings are done and how to improve performance with presentations to and results from the rating agencies. Third, deepen the domestic capital markets where Nigeria is making great progress, but more has to be done. So ratings do not just serve international investors, but also help mobilize local savings for local development. Fourth, support the development of African-owned rating initiatives, but ensure that they are built on principles of independence, analytical rigor, and market trust, not political expediency. And finally, commit to good governance, because the lesson both of the U.S. downgrade and the Nigerian upgrade that I mentioned is that governance matters. Sound policies, institutional integrity, and reform credibility are what investors ultimately reward. So to conclude, ladies and gentlemen, credit ratings are not perfect, but they are indispensable. They can open doors to capital. They can discipline governments and companies, although that's not their particular aim. They aim to provide information to investors. These are indirect effects. And they can reinforce sound policy choices, again, as a side effect. If leveraged wisely, they can help transform the growth trajectories of developing countries, including Nigeria. But without governance and reform, even the mightiest sovereigns can falter, as they have. France was downgraded just a few weeks ago by Fitch. The challenge and the opportunity is before us. Nigeria has a chance not only to benefit from stronger ratings, but also to lead in shaping Africa's financial future through development of local capital markets and local credit rating agencies. Let us ensure that ratings are not just scorecards, but bridges to resilience, transparency, and sustainable growth. I thank you very much for your attention.
Much, Professor Mahesh Kotecha, the President, Structured Credit International Corps, SCIC, for your wonderful keynote address. You've been able to give all the tale of the two fiscal parts, which has to do with the United States and Nigeria, one having a downgrade while the other having an upgrade. But in all, you've also been able to show your experience cutting across jurisdictions, having a root in Africa, and then ending with the US and still having an eye in African development. I can say you have really put across today your huge expertise and experience. And you have also pointed out that credit rating agencies help to open up the space, especially in our world today that has become borderless, facilitated by technology, and that there is need to also look at data integrity, data quality, and that local content, especially when it comes to the African risk premium, should also be looked at in order to strengthen whatever is being done across Africa to align with global standards, to be able to bring and then build the credibility and integrity it deserves. On that note, I want to sincerely thank you so much, Professor Mahesh Kotecha, for this wonderful keynote address. Thank you so much.
Thank you for the opportunity.
It is now time for the book launch. This book is very important, and we would like to bring this book to you. A book on Abimbola Adesoju's autobiography that is titled, You Never Knew Me. This book is a masterpiece. It is well articulated, and it shows the journey of life, bringing out the strengths and weaknesses, and also pointing out to the fact that life itself is a mixture of dreams, visions, determination, struggles, resilience, tenacity, providence, faith, as well as favor and blessing. Meanwhile, it was the global English playwright and poet William Shakespeare who clearly stated in his 12th Night that some are born great, some achieve greatness, and some have greatness thrust upon them. Obviously, Abimbola's account is a blend and replica of the above expression, hence it has been producing excellent results with positive future outlook and trajectory. Abimbola's memoir, which is a must-read, was spread across 9 chapters, including With My Mother, Parenting is Forever, The Growing Up Years, The Gap Years, The Family Man, Parenting, Building the present on the legacies of the past, DataPro, a vision foretold, becoming a data protection compliance organization, DPCO, and DataPro, a future assured. This book demonstrates that there are great possibilities irrespective of the odds and challenges in life, as one can always soar like an eagle above the tempest, hazy and cloudy sky to realize his or her dreams. Success is neither for the feeble-minded nor the quitters, but it is for those that challenge status quo, confront bottlenecks, and dare to conquer and excel with bruises, scares, and soothing breaths of fresh air of achievements. The account in this book encourages all to stay the course and faith, never to despair, relent, or lose hope, but continuously work hard and look up to the Almighty God, as the future is always bright. The Abimbola autobiography is a must-read for all, as a source of hope, resilience, hard work, doggedness, tenacity, and success. Distinguished ladies and gentlemen, please join me as I gladly invite the founder, CEO, DataPro, and the autobiographer, Mr. Abimbola Adesoyoju, to present and unveil his autobiography. Mr. Abimbola, please go ahead. Thank you so much, the founder and CEO. You can see the book now unveiled. Very, very beautifully designed with his image on the front. He has earlier mentioned that this book will be on Amazon by early next year, but there are some copies that will be given as e-copies after this program, based on attendance. We collect and then distribute them. You can get a copy by the turn of next year when this book is ready, available on Amazon. And for those who are present in this program, e-copies will be distributed through your contact, which we already have. Thanks the founder and CEO, DataPro, Mr. Abimbola Adesoyoju, for the production of this autobiography of yours and the choice of its release that has coincided with the milestone, the 30th year anniversary of DataPro. Okay, it is now the time for us to cut the anniversary cake. I have the pleasure and honor to introduce the head, Client Services and Business Development, DataPro Limited, Mr. Kehinde Rashid, to present and supervise the cutting of the 30th year anniversary cake. Mr. Rashid, please.
Thank you, everybody. Good afternoon once again, depending on where you're watching us from. This is coming to you live from Lagos State, Nigeria. And as part of the celebration today, like you've been heard, we are celebrating our 30th anniversary, and we are about to cut the anniversary cake. Okay, joining me on the cake stand is our MD and Mr. Abimbola Adesoyoju. We also have our Executive Director, Mrs. Franca Adesoyoju. Beside our MD is Mrs. Adenike Oni. They will be cutting the cake, and I'll also be calling on our Executive Director, Mr. Oladile Adeoye, to also join them on this cake stand. And then we also have our team as part of the consulting team. Alaji Shitu, please join them on the cake stand as well. Alaji Shitu, please, let's join them on the cake stand. And viewers watching us, you can also join us on your virtual cake. Just imagine a virtual cake in front of you, and there's a virtual knife, and then let's cut the cake at the spell of DataPro. Somebody give me a D, A, T, A, P, R, O. Congratulations, DataPro, and thanks to everyone for watching. And then as we continue on the webinar, thank you so much. And we appreciate you for joining me. I appreciate you. Thank you.
It's time to come together. It's up to you. What's your
For your supervision of the cutting of the 30th year anniversary cake. That was a good job, and we also thank Those that joined you, Mrs. Franca Adeshoyoju, Mrs. Oni, and Alhaji Rashid. And then the MDCO, Mr. Abimbola Adeshoyoju. We thank you so much for all of that. Now is the time for the panel discussion. I have the privilege and honor to invite the panelists and the moderator, who are astute professionals and subject matter experts with very deep knowledge, strong qualifications, and vast experience. The panelists include Mr. Zwelibanzi Mazir, COO, Sovereign Africa Rating, Mrs. Angela Jide Jones, CEO, Shewak Capital Limited, Dr. Dauda Sembene, CEO, Afri Catalyst, Mr. Riyad Saga, Chief Rating Officer, Mr. Obed Mbuzi, Director, Premier Rating, and then the moderator, Prince Oladele Adeoye, the Chief Rating Officer of DataPro, who will also be moderating the program. Prince Adeoye has over 20 years in credit rating and also heading several units in DataPro. He has risk management experience. He has also examined over 70% of quoted companies in the Nigerian stock market, the NGX. He has experience in risk rating and also analysis experience, money laundering, combating financial terrorism, and countering proliferation financing programs and training. He has consulted for Intergovernmental Action Group Against Money Laundering in West Africa, JABA, on EU-funded program on strengthening anti-money laundering in West Africa, SAMWA project. As the panel discussion progresses, we encourage you, our esteemed participants, to make use of the chat and question box on this platform to capture your questions and comments. Please be assured that the questions in the chat and question box will be extracted and addressed at the end of the panel discussions by the panelists. Please feel free to make generous use of this chat and question box. Without much ado, I now invite Prince Oladele Adeoye, the Chief Rating Officer at DataPro, to moderate the panel discussion with the team, Navigating Economic Uncertainties, the Role of Credit Rating Agencies. Prince Adeoye.
Thank you very much, Dr. West. It's a pleasure to be here, and I want to believe that our viewers at this point in time are giving us the needed attention. This evening, depending on where you are listening to us from, we've paraded an array of experts in the credit rating world, and together we shall be discussing the role of credit rating agencies in a dynamic global economy. So with me at this point in time, we have Zwelibanzi Mazir, the Chief Operating Officer of Sovereign Africa Rating. Also, I have with me on this panel Angela Jide Jones, who is equally the Chief Executive Officer, Shewak Capital Limited. I also have Dauda Sembene, the CEO, Afri Catalyst. While also with me here is the Vidya Zaga of Ligazin, that's the Chief Rating Officer, Kia Rating. Additionally, I will also be sharing this panel with the Director of Premier Rating Services by the name Obed Mbuzi. Before we open the floor for the conversation, it will be my pleasure to invite each member of the panelists to give an opening remark. And I think each of our panelists will do good to restrict the initial comments to about 45 seconds or thereabouts. But you know I like to start from the lady in our midst. And so permit me to start off with Angela. Angela, please, you have the floor. Thank you.
And congratulations for 30 years. 30 incredible years. I've been so excited thus far, and I've learned a lot from today. Thank you. My name is Angela Jide Jones, as I've been introduced. I'm the CEO of Shewa Capital. Global trade tensions and supply chain realignments define capital flows. Inflation, energy security, and ESG reshape investors' risk perception. Investors demand clarity, they demand comparability and credibility in ratings. So having said that, I would say that ratings are still the first signal of trust and stability.
Please go ahead. Thank you.
Okay, sorry. Okay, I don't know if you heard me. So having said that, ratings are still a first signal of trust and stability. In volatile periods, investors prize transparent exposures, key, very key. They also look at resilient business models. And finally, they also look at sound governance. So investors look beyond the ratios. They look to the story behind the rating. I will just leave that as my opening remarks. Thank you.
Thank you. They look out for the story behind the issue. That's the voice of Angela Jide Jones. Permit me to go to Mazea, the CEO of Sovereign African Rating. Can we have your opening shot? Thank you.
Thank you so much. Good afternoon, esteemed colleagues and guests. It is a privilege to join you today on behalf of Sovereign Africa Rating, and congratulations on 30 years. As a proudly African credit rating agency committed to advancing transparency, credibility, and financial resilience across our continent, we gather at a time when global volatility, from inflationary pressures and debt distress to currency fluctuations. However, these are our lived realities that demand a nuanced and context-aware responses. And that's precisely where Africa-led institutions like DataPro and SAR must step forward. As we explore today's themes, I invite us to consider the deeper role that credit rating agencies as strategic partners in shaping investor perceptions, guiding trust, and guiding reforms and building trust. As SAR, we believe rating agencies must do more than just measure risk. We must illuminate resilience. They must recognize reform momentum, institutional depth, as well as developmental aspirations that define the African economic journey. All the above that I just mentioned. We must be grounded in independence, methodological integrity, as well as our commitment to the continent's long-term credibility. I look forward to our discussion today, along with our fellow panelists. I thank you.
Thank you very much. As rating agency, we must dwell largely on depth and independence. That is the word of Mazea. Permit that at this point in time, I call on Dauda. Dauda, you're forward before we delve to the main issues. Thank you.
Well, thank you very much, Mr. Moderator. So you asked for to be brief. I'll be very brief. So my name is Dauda Sembène, and I'm the CEO and founder of AfriCatalyst. AfriCatalyst, for those of you who don't know, it is a global development advisory based in Senegal and with an office in Nairobi. And our mission is to facilitate the mobilization of financing for development and climate action in Africa, and we do so through research, advisory, advocacy, and capacity building. It's a pleasure to be here, and I would like, first of all, to thank DataPro for inviting us, but most importantly also to congratulate them for the great work they have been doing for 30 years. And definitely we look forward to the discussion today. I think the team is extremely well selected. The role of credit rating agencies in a dynamic global economy, this is very critical. And actually it makes me think of a sentence that an African finance minister said in one of the ministerial events that we once organized at AfriCatalyst and UNDP. He said that credit rating agencies were founded to facilitate the movement of capital, of private capital and capital in general, private and public. But he indicated that they have not played that role and they have now become a barrier to the movement of capital. Is it true? Is it false? The question is not there. The question is how we can discuss and make sure that actually whether it's true, we reinforce it. We address it. And if it's not true, then we actually sort of pass on the message. So this type of discussion is extremely well timely, and we look forward to contributing to it. Thank you.
If I have to give you a rating for that opening remark, I'll probably be dishing you a AAA. You promise to be very brief, and brief you were. So thank you very much. I'd like to also be having Obed Mbuzi, Director Premier Rating Service, for your opening remark. Thank you. Can you hear us? We seems not to be having your audio here. Obed.
Okay. Are you able to hear me?
Yeah, good. Awesome.
All right, okay. My name is Obed Mbuzi. I'm from Premier Rating Services, a credit rating service in Zambia. And we are privileged to attend this webinar. And we thank DataPro for bringing us together to be able to discuss the role of credit rating agencies in a dynamic global economy. I would like to say that we thank them for really being the leading agents for 30 years. It's not an easy journey. I know they've been having these challenges here and then, but I'm sure that they have gone through. And it's an example of how they've been resilient over these years, looking at many challenges in Africa. But what I can say is that credit rating, we are the gatekeepers between issuers and investors. We actually ensure that we shape the investor perception and facilitating capital flows. So I would actually be interested to actually hear from the perception of whether credit ratings is an hindrance to capital flows or not. I think that is a very, very important question. But I believe that credit rating is actually a path to unlock that investment which we need in Africa. Thank you.
Thank you very much. I guess you set a question right there, and softly you provided an answer at the same time. So thank you for that. I get at this point, Ligesa, it will be your turn to give us your own perspective.
Hi, good evening, everyone. First of all, I would like to extend my heartfelt congratulations to the entire DataPro team on achieving the remarkable milestone, your 30th anniversary. 3 decades of excellence is truly a commendable journey. Myself, Vidya Sagar, I am the Chief Rating Officer for Carriage Africa, based in Mauritius, which is also part of Carriage Group. It's a leading credit rating agency headquartered in India and growing our international presence across Africa and Asia. It's a privilege to join this distinguished panel to discuss the evolving role of credit rating agencies in today's dynamic environment. As markets navigate through this sustainability, digital transformation, and geopolitical shifts, the relevance of credible and transparent ratings has never been greater. I look forward to sharing insights of our international experience and learning from our collective expertise this forum. Looking forward to it. Thank you.
Viewers, from wherever you are, I think at this point in time, we can delve to the real issues. First of all, I will be asking Mazia, at the opening remark of Sewa, Angela, she adduced to the fact that issues such as inflation, including debt distress and currency volatility are some of challenges we are dealing with in the continent, particularly when you observe that we are running about double digits in this present situation. So, in your opinion, how should African sovereign rating account for these heightened economic challenges? Mazia, the question is for you. Thank you.
Thank you for that. At Sovereign Africa Ratings, we do recognize global risks, but they are not exogenous. However, they manifest differently across African economies, depending on structural resilience, policy agility, and institutional depth. So our rating methodology incorporates a number of aspects. We assess the inflation from the risk perspective of local currency issuance, the debt profile, accounting for debt burden, as well as affordability by assessing